Well, good afternoon, everyone. Welcome to the 10-Minute Investor. Todd Schaefer here with you. It is a pleasure to be with you to provide one of my favorite presentations to make to folks. Before we start, though, check on our technology. Make sure that you can see both my screen and, well, actually see my screen and hear my voice at the same time. So if you would take the time to chat into the GoToWebinar toolbar box to let me know that you are there. Thank you, Gary and Richard. Appreciate that, and all of those of you who are piling in behind them. So, the 10-minute investor, how to consistently outperform the market in less than 10 minutes a day. And to clear up the perspective here, we're not doing a 10-minute in and out of the market, a 10-minute holding period here. We're at the other end of the spectrum where we're saying, no, let's slow down, let's relax, right? Take the hammock approach here as I have in the picture. Right? So it's not that we're in and out of the market in 10 minutes, it's that we have a daily routine that only takes 10 minutes or consumes 10 minutes of our time. Right? And that's the promise of this webinar, is that I'll give you the information today that you need to have to help you invest with confidence, consistently outperform the market in this 10-minute a day routine. Right? So you're in the right place, particularly if you're tired of buying stocks only to see them drop right after you buy them. Seems like the market maker is looking over your shoulder to sell out from underneath you right after you buy it, right? Or maybe you're frustrated because you haven't known when to sell. Maybe you've had some profitable trades, but then you watch them turn around and become losers simply because you didn't know when to sell. Or maybe you feel that you don't have enough time to manage your stocks, right? Maybe you have a job during the day or family commitments, but in today's modern world, time seems to be short for everybody. Or maybe you just don't have any confidence that you can actually make money in the markets, right? That you can actually do this, and not in small part because of the things that have happened to you in the past, the mistakes you've made in the past have convinced you that maybe this just isn't for you. This just isn't something that you can do, maybe. Or maybe all in all, you're really just looking for a simple way to buy the right stocks at the right time. If you're any of those, or maybe a combination of some of them, then you are in the right place, because today you're going to learn several important things. The biggest thing we're going to cover is in the first section, and we're going to make the shift from where you're getting inconsistent gains to making consistent gains. So things we cover in this section, we're going to cover the biggest mistakes that you're probably making. We're going to identify those mistakes, talk about what they look like, and what not to do. So just by knowing that, just by eliminating the errors, that'll help you out. But then I'm going to actually show you what you should do, the proactive steps you need to take to get consistent gains. All right. The second piece then is about how to find good stocks. I'm going to give you a three-part checklist, the same checklist that I go through when I'm looking for stocks that I want to buy. In this section, I'm going to show you what to look for. I'm going to show you some examples, and then you and I are going to actually do it together with live market action today. All right, so we're actually going to use a tool I use, take a look at some stocks, and my guess is that you'll come out with a half dozen or so that you would consider buying Monday. All right, so that's a very practical and I think kind of fun part of the webinar. And then finally, I need to wrap it up into a 10-minute routine. And hang on a sec. Windows wants to update, and I think that'd probably be a bad time to do that. Okay. The third part, we're going to wrap it up into this 10-minute routine idea, right? Which is why the webinar is called the 10-Minute Investor. It's a 10-minute routine you can do each night to manage your portfolio. It's the same routine that our clients use. In fact, it originated with one of our clients back during the financial collapse. So he implemented this portfolio, or this plan, and turned his portfolio around. But that's the structure of the presentation today, what we're going to cover. All right, so if you stick around to the end, one of the tools that I'd like to share with you today is a template that will help you create your own trading system. Right, so I have that as a PDF. I'll hand it out at the end of the presentation. If we get to the Q&A and I've forgotten, then remind me. But that'll also be a helpful tool for you to start organizing some of the things we're going to cover today into a useful outcome for you. All right, so Every group is different, so I like to start off this conversation by focusing on what you need, where you're struggling. So if you would, chat into the toolbar here. What's been the hardest part about making money in the markets for you? Where do you find yourself struggling? Maybe it's you have a hard time finding stocks. Maybe you're never sure if you should be buying that stock today. Maybe you don't know when to, right? Where do you find yourself struggling consistently? As those answers are coming in, what I can tell you is just in my experience of doing this presentation more than a couple times, right? The answers typically fall into three categories or three buckets I like to call. Selling first in with when to sell, up or down. Yeah, I'm with you, right? So those three buckets typically are when should I be buying? What should I be buying? And when should I be selling? So see if your answer to that question didn't fall into one of those three buckets, because those three buckets form the pillars, if you will, of any trading system, right? Any trading system needs to answer those three questions. All right, so let me set up the problem, if you will, or the challenge that we're experiencing that's making it hard for us to be consistent in the market. And to kick that off, it might be helpful for you to know, or comforting to know, that most people struggle, if not fail, at investing when they're trying to take on the financial performance of their own accounts. Right? We struggle to outperform the market. And it's not just us, it's the pros too. Right? Here's a study done by the folks at Dalbar. We're looking at the S&P 500 versus the average investor's returns. The orange lines are the S&P, the blue bars are us. Right? And yeah, we consistently are underperforming the market over time. Well, what happens to you when you experience that? Well, you start getting frustrated, right? You curse the market, that the market gods are against you, right? That it's a rigged game. Or maybe worse, you decide that you must be the problem, right? And what does that do to your performance psychology? Or any other fill in the blanks of negative emotions that pile up when you're struggling to be successful. Well, I want to kind of stop that negative feedback loop, and let's think instead about what it would look like if we could do this well, right? If we could outperform the market, right? You wouldn't have to stress about your trades or your portfolio because you'd know that you have things under control, right? Even if trades go against you, which you know they will still, right? They can go, you can have a couple losing trades and still know that you're under control, and that leads you to trade with confidence. And from a performance psychology basis, that makes a huge difference. Right? So let's first talk about how we're going to move from inconsistent performance to consistent performance. All right? And the first thing we're going to do is talk about the mistakes that you've been making that are causing you to be inconsistent, and therefore also not confident. Right? VectorVest has been in the service of coaching individual investors and providing resources for them for about 30 years now. And in that time, we've identified the four biggest mistakes that we see people consistently making that cause them to be inconsistent. So it's extremely important that you focus in on this, right? And understand the mistakes that you're making and eliminate them, because if we don't get them under control, you will never fix things. Right? And that sounds like a pretty powerful statement, right? Well, yes, it should be. So let's go through those mistakes. The first mistake is that we see people thinking of the money first. Now, most of you are probably blanching at that statement. You're saying, well, of course it's about the money. That's why I'm investing, right? It's a money thing. But really, in terms of a performance psychology approach, well, you're thinking about the reward first. Right? You're thinking about the new boat or the new house or whatever it is you're saving or investing for your secure retirement. When you think about the money first, when you think about the reward first, it sets you up for a particular set of failures. And I'd like for you to stop for a minute and think about successes you've had in your past. right? Whether it was scholastically, on the job, in a sports endeavor. Did you find that success by focusing on the reward, or did you find the success by focusing first on doing the job at hand well, right, doing the task at hand well, and the rewards followed? And that's the key that we're going after here first. Let's focus first on making good trades. The money will follow. When you focus on the money first, the reward first, if you come across any struggles, which of course you will, you start getting anxious because you start seeing the reward slipping away, right? And when you're making those kinds of decisions, you're making emotional decisions, right? So when you think about the reward, instead of just focusing on doing the job well, it causes you to become emotional and make emotional decisions, especially when the market is up or down with a lot of volatility like we've been living through recently. Maybe that's what piqued some of your interest, right? There's a lot of emotional decisions and a lot of emotional trading going on. And when you're emotional, you typically make poor decisions. At least not the same decisions you would have made had you stayed in your rational self. Right? If you think about the last time you had a road rage incident, which most of us have, and even if you haven't, maybe you've been the victim of one. Right? Whether you were the instigator or not, as you play it back in your mind 1,000 times, were you proud of your performance? Right? Were you proud of the decisions you made? Right? When you came back from your, I don't know, your less controlled self? Right? Did you make the same decisions when you gave yourself over to your emotions? Did you make the same decisions that you would have made had you stayed in your rational self when you weren't upset? Well, no, right? Of course not. And of course, if you were the victim of the road rage incident, are you not sitting in your car thinking that person has lost their mind? Right? So let's play a little game. Bring this back home to your investing. It's a little game I call Have You Ever Said? I'm going to present you with 5 statements. And I want to know if you've made any of these statements relating to a trade. Right? So if you notice one you've never or that you've ever said, let me know in the chat box the last time you said it. All right? So, here we go. First one. I know it's down now, but it'll come back. Have you ever said that related to a trade? How about number 2? It's already down 20%. I might as well hold on to it now. And maybe your number isn't 20. Maybe it's 25. Pick your poison. How about number 3? I have a profit, but if I close now, it'll probably keep going up. How about number 4? I know I lost more than I thought, but if I close now, it'll probably go up tomorrow, or after earnings, or at the conference call, or again, name your event. How about number 5? The last time I sold stock, it kept going up, so I'm not selling this one yet. So those are my 5 have you ever said examples. So, have you ever said any of them? Let's turn up the wick a little bit. Because Sid says, yep. Ross says, oh yeah. Sid says, well, I didn't make the last one. All right, congratulations. All right, so the idea here is, let's bring this back to your trading. What do all of those have in common? Domingo says yes to all of them. Right? Well, they're all emotion-based statements. So if you've made these statements, and some of you have made more than one, and maybe even said them more than once, right? Made that statement more than one time, you've been making emotional decisions. There's your evidence. And what did we say about emotional decisions? Right? You will not be successful if you're making emotional decisions. If you're saying these things before, during, or after any of your trades, you will not be consistently successful. Right? So what's the solution? Well, the solution to emotional trading and emotional decision making is to build in a system. Right? You need to have a system, kind of a set of rules that keeps this an intellectual process, not an emotional one. Right? So my screen is filled up now with people who have said they've been saying these things, doing these things. And the first thing I'd have you do is do a little gut check. did you feel the emotions working on you again even now? Right? You start feeling some of that anxiety, your stomach tightening a little bit as you replay in your mind either your road rage incident or your bad stock trades. Right? So we've identified the problem here, so let's pause for a minute. Let's get back to your happy place, your neutral emotional state. Right? Close your eyes, take a couple deep breaths, whatever it needs to do, because this is still the first mistake. We still have 3 more to go. All right. Now, the first mistake, admittedly, is more mechanic or more psychological. The next are more mechanical. All right. So the second mistake that we see folks making is that they buy stocks that are going down. Now, most of us, when we get into any new endeavor, right? You're starting something new. You don't know anything about it. So what do? You try to do some research, obviously, to learn as much as you can about it. Right? Whether it's your golf swing or your investing. Right? And you try to learn as much as you can to avoid the mistakes and be successful faster. Right? So what do? Well, when I got into investing back in the 70s, the thing was go to the library, right? We didn't have the internet. You go to the library, and you look for all the fattest books on personal finance, and you take them home and start doing your research. Maybe you subscribe to some financial papers or periodicals, right? Now you turn on YouTube, or I think if you just sign up for one newsletter trial, then you get 4,000 emails a day. Right? So what are we doing? We're turning to the industry professionals, right? Because those are the guys that write the books, that produce the television shows, right? We're looking to the industry professionals to get pointers on how to become successful, right? We call those folks the industry gurus. And those industry gurus tell you to buy stocks that are going down because they're getting cheaper. You can buy more shares. Your average cost per share falls if you keep buying additional shares as the price is falling. All of that's absolutely true. But it's also setting you up for another failure point. Let me show you what ends up happening a lot of the time when you are buying stocks that are in downtrends, that are falling. So here's a real life example. Came to us from one of our clients in one of our coaching sessions. And let's talk about this stock because it's a great example. It's Windstream, and I don't really even care about who it is, what company it is. What I want you to focus on is the graph pattern. We're looking at a 1-year chart here, right? And stock had a nice rise up. Stock is pulled back. Currently on a little bounce, so it's coming off its 52-week low on a nice little bounce. What a great time to be buying this stock because we're buying it at the low, right? How much lower can it go? We'll just get in right here and we'll ride this puppy all the way back up. Well, there's a couple problems with that, but one of them is pretend this hard right edge was actually over here, right? In other words, this was a good time to buy, 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 and now this is a good time to buy. Right? We're not riding this puppy way back up. We're just buying it lower and lower and lower and lower. Right? So our client brought this to us in our coaching session, and that's basically we get together with our client several times throughout the week, but on our Thursday coaching sessions in particular, we talk about what I'm going to show you here. All right, he came to that session, he said, "Hey you guys, I just bought Win 2 days ago. What do you think?" Obviously I'm paraphrasing. So on this orange date line is the day he's chatting that into us, which means that he bought it 2 days ago. He bought this last green candle. I hope you can see that on the screen resolution. Right? Have you ever bought the last green candle? Yeah, me too. Right? Well, this is a classic example of being taught to buy stocks that are moving down. Right? So the good thing is after we had our conversation with him for a little bit, he typed this in the box, selling it now. So I'm going to talk about the specifics of why he sold it, but I want to get across the main point here. When you buy stocks that are going down like this, they typically continue to drop. For example, Windstream, after he sold it, right, he talked to us on that orange line, after we talked about it, it dropped another 10% in the next 2 weeks, and a total of 62% before it actually started to get a bounce. So keep this in mind. what you see in the past is most likely what's going to happen in the future. And being taught to buy stocks that look like this is one of the reasons that people get set up to make the third mistake. And that is that we hold on to our losers too long. You might have been in the same shoes as Steve, right? You buy that stock, right after you buy it, it starts to drop. You end up holding on to it, thinking, oh, well, it'll come back. It's got to bounce. Oh, come on. Please, come on. I could have been wrong on this one, too. Or probably the worst answer would be, well, maybe I should buy more of it and lower my cost, right? One of the worst things you can do is buy a stock and not have an exit plan. It's like jumping out of a plane without a parachute. If you look back at that Windstream example, a lot of us would have just sat on the trade hoping and praying for it to come back. And then you find you're still holding it months, maybe even years later. Right? It's setting you up, again, particularly from a performance psychology, but it's setting you up a couple different ways for more failure. First of all, there's a huge emotional drain of having a trade like this in your portfolio. Every time you open up your trading account and you see that double-digit red number, it's a constant reminder that you stink at this. How's that for your performance psychology? Go get them, Tiger. Right? Well, there's also two other big problems that you have here. First of all, you have a loss on this position, right? And you've heard how do I want to characterize it? It's true, it's not a loss until you've actualized it, right? But is that really true? Right? The stock is worth what the stock is worth today. And if you came under financial duress and had to liquidate the position to raise funds for something, that's what the stock is worth. And when you consider the opportunity cost that's associated with that, right? So this stock has pulled back 60%. How long is it going to take just to get back to break even? Well, while you're sitting here waiting for that to happen, this money could be put into a stock that's actually doing what you want it to do. So there's an opportunity cost by letting your funds be tied up into this loser. And we don't want that to happen, right? So the way you avoid that is you stop buying stocks that are falling, first of all. And when you get into a trade, you're going to have an exit plan. Right? Here's another example. A woman that came to our coaching session again owned this stock. She basically bought it at the upper left corner, right? And it's obviously not been doing what we want it to do. So we had the same conversation that we had with Steve. We said, so, why are you still in it? She said she didn't have an exit plan. She's still holding it now because her husband thinks it'll come back. So now, by not having a predetermined exit plan, not only has it caused her the monetary loss and all the other things we just talked about, it's also causing unneeded stress in her marriage simply because they didn't have a trading system worked out beforehand. When are we going to recognize our mistake and get out of this thing? It's not doing what we want it to do. All right, for our fourth mistake, and this is probably the biggest one, is we've been taught to ignore market direction. This is huge. For years, the gurus have taught investors that buy and hold's the way to go because you can't time the market, right? And unfortunately, when you buy and hold, it causes a roller coaster ride in your portfolio. And just like the roller coaster, the ride up is slow, but the downdrafts are really fast, right? Uncomfortably fast. So I'm guessing there are people in the room who remember the dot-com crush from 2000. I certainly do. Right? And maybe if you didn't live through that one, then certainly you lived through the 2007-2008 financial crisis. Right? After the dot-com bubble burst, right, market pulls back, rallies for another, 6 years. Right? Takes us 6 years to gain back or get to the next high, and then another year and a half to lose almost everything. Right? If you look just at 2008, the market basically dropped 40%. The problem is when you lose 40%, you need to gain 66% to get back to break even. Right? And if your goal, which I have a lot of folks who come to me who have objectives of about 10% a year, you just signed up for a 6.5-year campaign to get back to break even. right? So it doesn't take much imagination to figure out that, wow, well, first of all, if you're near retirement, you can't absorb a 40% decline in your portfolio. But secondly, even if you have more time, any bit that you could do to reduce that 40% drawdown is going to pay you in spades on the recovery. And as a little sidebar, you have to have the courage to get back in the market when it starts going up again. I heard a lot of people who sat out certainly the first couple of years of the recovery because of the fear factor from living through the plunge. We're back to our emotions again, aren't we? All right, so I want to introduce at this point our case study, Robert. And he wrote us and he said he'd retired in 2005, but when the financial crisis hit in 2007, he said we'd used professional advisors for direct shares and a few managed funds to build up our retirement portfolio, and they all told us to ride it out. By mid 2008, our portfolio was down 40%. Our retirement plans were in ruins. We were in total despair, and it looked like I'd have to get a job. So before we move into his situation, let me lock this in for you before we move ahead. Right? We just covered the 4 big mistakes. Thinking of the money first, buying stocks that are going down, holding on to losers too long, and ignoring the market's direction. What I want to do is another little gut check personal inventory for you. Of these 4 mistakes, which ones have you made? Kind of similar to what we just played with the Have You Ever Said quiz. So which ones have you made? Have you made any of them more than once? So Domingo says, yeah. I feel so exposed. Well, nobody sees your answers, Sid, except me. William says all of them. 2 and 3 says Ross. All right, so let me turn up the wick again. How much did it cost? The biggest mistake that you made, how much did it cost? And don't tell it to me in percentages. I want you to translate it into dollars, because that's more painful. Right? And what I'm trying to drive home here is that these mistakes have a real cost associated with them. And if you're continually making them, do you see how you're sabotaging your success? Selwyn says $117. God bless you, Selwyn. the rest of the people chatting in would love to have that as their mistake. So we need to stop the insanity. Is that fair enough to say? Right? If we're going to take our financial futures seriously here, we got to stop making these mistakes. This is not a hobby that you just go, oh, yeah, I blew that one. Oh, well. Let's get serious about organizing our approach to the markets and run this more like a business than a hobby. All right, so you get the idea. The mistakes can be very costly. Let's stop making them. Those are the big mistakes. So the problem, I've kind of alluded to this a couple times then. What's the real problem here? Well, the big problem is the model you've been using to invest, that system is broken. If you had a system at all. I've run into a lot of folks who just kind of buy stocks when the economy's doing well and there's good headlines, right? And they go out and buy, a couple hundred shares of companies they do business with, not even thinking whether or not the companies are profitable or what their prospects are. But, I wear Nike shoes, so I'll buy some Nike stock. Okay, great. That's not a system, right? Because on the other side of it is, okay, I sell when the economy tanks, and I hear about how much money people are losing. I look at my brokerage account and I go, oh, wow. That's not a system. All right, so to fix the problem, then we need to install the correct system. So let's talk about the proactive things that we can do. Right? I want to share with you the system that we use with our clients. It's a system we teach and support with live coaching every week. We get together and focus on this 5-step system. In these webinars, I draw it out as a triangle. And then because there's 5 steps in the system, I segment the triangle into 5 parts. Straightforward enough. All right, so the first step is we want to be able to analyze any stock that we own or are interested in owning and know whether it's over or undervalued, whether its earnings are rising or falling, and how safe it is. Right? So take an inventory of all the stocks you own or want to own and understand them from those three perspectives. Secondly, you don't want to hold on to losers too long, so you need to make sure every stock you own has a stop loss in place to minimize your risk. Right? In other words, you want to know your exit, and you really want to know your exit when you get in. Third, you don't want to ignore market direction, so you want a definite signal or rule in place to make sure you know when the market's rising, so you know it's okay to be buying. Some people use moving averages on the S&P. A lot of institutional investors, the same guys who tell you can't time the market, use a 50 and 200-day moving average crossover on the S&P 500 as their signal. They call it the golden cross. Right? And it's not that we're predicting where the market's going. We're identifying that the current market is rising. Right? So I think that crossover is a little slow. I'll tell you what I use here in a little bit. But we also then, on the fourth step, want to have a methodology for finding good stocks. We don't want to buy stocks that are going down, so you want to find good quality stocks that are rising in price for your portfolio. You want a techniques that finds stocks that are likely to go up, not down. And finally, you don't want to trade emotionally, so you want a written plan that you follow and you know works. It's not just some scheme in your head, right? It should be a plan actually written down. And I like to say with enough specificity that you could hand it off to your brother-in-law and go on vacation and they'd have no trouble running your account, right? You want to think these things through beforehand, before things start getting emotionally wonky, all right? By using the 5-step process, it leads you to trade with confidence and generate consistent performance. So the first thing you want to do is focus on any areas where you're lacking. So do a little personal inventory again. Take your pen or pencil, put a little happy face next to any of these sections that you are good to go. You do it consistently, it works well for you, you like it, you're happy. Put a little smiley face there or a star or whatever. If there is, however, a section that isn't working for you, or isn't working consistently, or maybe you don't even do it, put a frowny face next to it. Right? So what we've just done is we've identified the holes in your system. So the good news is you just start working on the first frowny face. Right? Start at the top, go to the first frowny face you find, work on that section, because fixing that section feeds into the next. Once you have all smiley faces, then you have a system that is cohesive. All right, so what did you just learn about your investing strategy? Well, hopefully you learned where you need to focus first, right? And I'm sorry, we can't fix all of those frowny faces in an hour here, but awareness is the first step on the journey, right? So a lot of folks at this point realize now that they had no system, or they now know where their system's been broken, right? Let's talk about the next phase of improvement here and talk about how to find good stocks. All right, so what's holding everybody back from being a great stock picker, great investor? Well, it might not surprise you at this point in the presentation that most of the problem isn't your fault, right? As Mr. Miyagi said in Karate Kid, right? There's no bad students, just bad teachers. The industry is full of bad teachers. When you try to take this on for yourself, right? When you try to take on the management of your own portfolio, the first thing you probably ran into is you just get buried by data, right? This industry generates a lot of data, right? And this is just a couple sample pieces, but I still remember when I started, because back in the days when actually newspapers were on paper, right? Open to the financial pages to look at at all the stock listings. There's 4,000 stocks listed there in a number 4 font alphabetically. You're looking at those pages and I'm thinking, well, what am I supposed to do with this? Right? Just totally overwhelmed. So it didn't take me long before I kind of folded those pages. I thought, well, that's ridiculous. I can't do that. Right? So the industry is generating all these data points, and in fact, there are services that say, well, yeah, for this nice monthly fee, look at all the data we can provide you, all this information we can provide you about this company. Right? So I look at their report and I go, well, yeah, I agree. There is certainly a lot of data there. But it doesn't take much time poring over that data before you're facing the question. You're thinking to yourself, well, what am I supposed to do with all this data? Right? Which of this is important and which of it is kind of nice to know, and maybe some of it maybe that I don't even care about? Well, they give me the bullet points here on the sample report, so I'm guessing that those are the 12 most important data points. But I'm still in the same situation when I try to compare this stock, Merck, to stock XYZ, and try to do a side-by-side comparison. How am I supposed to compare 12 different data points? Having data is not really my problem. My problem is I'm not being given information that I can take action on. Right? I'm not being given the right tools to do my analysis. It's like being a mechanic and not being given the right wrench to turn the nut. Right? Additionally, you have the gurus out there, and I'm going to use Mr. Kramer as an example here, and it's not to disparage Jim Cramer. He's a brilliant guy. He's made a lot of people a lot of money. You don't get your own TV show by being some kind of slouch or publish, 14 books. So it's not to beat up on him, but he says in his book, Mad Money, right, that if you want to take this on for yourself, you need to be ready to commit yourself to doing homework on any stock you're going to trade. And homework means committing 1 hour per week per stock. Much less than that, and you might as well be gambling. Well, let's do the math, right? Let's say you have a 10 or 20 stock portfolio. We just signed up for another job, right? And the subtext of the message is, well, yeah, that's right. So I'm a professional. I do this all the time. So you should just give me your money and I'll let you know how well you did, right? And a little patronizing pat on the head. They're there, don't you worry about it. Well, that seems a little self-serving, doesn't it? And it also doesn't help me with my problem in that I'm trying to take control of my own financial performance because, according to the Dalbar study, most of the financial managers aren't outperforming the market. Right? So you haven't really solved my problem, have we? So we try to take it on ourselves. We're kind of swimming against the tide, and what happens? We end up looking at all those data points, or I'm looking at 200 charts a night looking for cup and handle formations or something. Right? And what happens? You're pouring over all that data and you end up in analysis paralysis. Right? You spend hours looking at all that information and it just becomes a blur. And if you've ever been in that situation, you start convincing yourself that you're seeing things that may or may not even be there. Well, that's not the solution. Right? What I really want is that I want to know what to look at and know whether or not I should be buying the stock. Right? And that is possible when you have the right tools. And if you don't believe me, get your pen ready, because in a minute you and I are going to walk away from this section and I think you'll have half a dozen stocks that you like. Right? So let me show you how we do this, but I want to set you up for success. So let me give you some background. Our founder, Dr. Bartolito, teaches us that good portfolio management starts with buying the right stocks. It's just like with a sports team. If you fill a team with great players, just having the great players will help your team do well, even if you're a lousy coach. Right? So back to our portfolios, by filling your portfolio with really good stocks, just having the good stocks alone will help your portfolio do well, even if you're a lousy portfolio manager. Right? So let me share a checklist with you that we're going to use when we're looking for our stocks to buy. Very extensive, isn't it? Right? So the first thing we're going to look for is we're going to look for stocks whose price is steadily rising with low volatility. Secondly, we're going to favor companies that are making money and actually growing their earnings. And then thirdly, we're going to favor undervalued stocks. Right? So let me give you a little quiz. I sure like quizzes in this presentation, don't I? Here I have 3 stock graphs. They're all looking at 1-year charts, daily bars, right? Looking at these 3 graphs on the price action, which one would you say is steadily rising with low volatility? Number 1, number 2, or number 3? Chat it into the box for me. I'm going to take a purposeful pause here to make you commit. John's first in with a 3. Ross, Sid, thanks. Yeah, good. All right, good. Everybody's giving me number 3s. Right. So you've figured out by now I like to turn up the wick a little bit. So we agree that number 3. I didn't say anybody say number 1 or number 2, by the way. We all agree number 3 is steadily rising with low volatility. Here's my bonus question. Up to today, which of these stocks would you buy? Which of them would you have favored? Which of these graphs would you looked at and said, ooh? I'm going to get some different answers now, aren't I? Well, a couple of you are cheating, still saying number 3s. Well, actually, I hope you are still saying number 3s. But yeah, so who's the first in? Ross is the first in with a 2, right? Sid says maybe number 2. Okay, well, let's talk about it a little bit, right? Because the analysis is really the payoff here. So let me get in here and activate my pen, if I can. There we go. All right, so we like number 3 because it's going bottom left to upper right, smoother the better is the way I like to say it, right? So the stock doesn't just go straight up though, does it? It does have periods here, consolidated here for a little bit. It does have pullbacks, but the key thing here is that when the price does pull back, it's not erratic. It doesn't fall out of bed here. You don't look at it the next day and go, oh my gosh, what happened? Right? If I had a portfolio of 10 of these guys, I would sleep like a baby because I'd have no worries or little worry that anything catastrophic was going to happen to me tomorrow, next week, next month. The other thing is, because the price action is so consistent, it's very easy for me to recognize when it's inconsistent. Right? Because most stocks do have some kind of a correction or the market turns and the stock turns with it, right? So I need to, eyes wide open, I need to be ready for that, and it's a lot easier to recognize when I'm in a stock that has a price pattern like number 3. So if you had a complaint here, and I try to put myself in your shoes, I'm trying to think of the guys who are screaming, guys and gals screaming at their monitors right now saying, yeah, but that stock's at a 52-week high, it's already made its move. Could you please show me how to find it down here in the bottom left? Gotcha. But let's table that question for a minute because I want to talk about numbers 1 and 2 here first. So we already talked about number 1 in that this stock is moving steadily lower. And how low is low? Well, I don't know, 0, I guess. I don't really want to test that out, do I? Right? And the point is, when you buy into a stock like this in anticipation of the rebound, it can be a long time coming. So we already know that we don't like number 1. Number 2 is the more interesting conversation because it really introduces this idea of your temperament or your objective in your investing. Are you an investor or are you a trader? So number 2 is higher on this year-over-year time frame, marginally so, right? But it's made these big price swings, right? It's going to higher highs and higher lows, but the swings are really big. We call that volatility. Traders love that kind of price movement because they can jump in here and jump out here, jump in here, jump out here, right? They just try to play the upswings, get out of the downswings. So it's a shorter term kind of jumping in and out trading approach. The problem comes if you're trying to buy this kind of stock and hold it for the long term. And here it kind of goes back to that conversation we were having about number 3. If this stock breaks down, right, it's hitting higher highs and higher lows, I'll know the price trend is broken down when the price fails to do that, right? So for instance, if the price, instead of turning, had kept falling and falling and falling and takes out this prior low, now I know the trend is broken down and it's time to sell. Well, do you see the problem? Right? By the time this stock is broken down below this low, I'm 20-30% off the high. I've watched my winner turn into the loser. So let's instead focus on the stocks that are doing what we want them to do. So let's talk about this idea of getting into them in the bottom left corner. So I've extended the graph now from 1 year to 3 years. I've added a little bit more information to the graph as well. I have on this top green line The value for the stock is calculated by VectorVest. We calculate the intrinsic value for every stock every day. We've got the price, of course, as daily candlesticks. I have on the bottom graph the earnings per share information as taken from VectorVest. Now, this is a little different from what you might normally expect. It's not just historical earnings. We include in our algorithm the earnings forecast as presented by the industry analysts from the market. Because investing is a forward-looking endeavor, right? We're looking for the future price action. So we want to favor companies that have positive earnings now and are forecast to have positive earnings into the future. And so I want this earnings line to go bottom left, upper right, smoother the better, just like the price. So let's talk about this particular graph, right? We're starting here in October, and let's pretend that we came to it, we found it here the next October. So this is the hard right edge of the graph, and you're looking back at that price pattern and you're going, wow, that's a pretty graph, just like we saw in the last slide, right? And you're thinking, wow, I'd sure like to get a piece of that, but you know what? It's at a 52-week high. It's already made its move. I can't buy that stock now. So you pass it off and I guess go buy, stock from graph number 1 or 2. Well, lo and behold, you come back across it the next October. And now the stock that you thought had already made its move at what, $50 is now at 65-ish, even after a little consolidation here, right? And you're looking at it thinking, well, man, that thing rose again, but you know what? 52-week high, I missed it. So, nope. And of course, you come to the hard right edge. Now we're at $90. The stock that you originally passed over at $50 is now at $90, again at a 52-week high. And so what you're saying now again, I can't buy because it's already made its move? The point here is that today's high price is tomorrow's low price. When you find companies that are consistently improving their financial value, their financial worth through positive performance, consistent performance. You want to know the best predictor of a sustainable uptrend in a stock's price? It's fundamentals. So let's use that to our advantage when we look for companies that we want to buy. All right, so there's my checklist. Stock price is steadily rising, low volatility. Companies making more and more money, growing their earnings, and we're going to favor undervalued stocks. All right. Remember we talked earlier about Steve and his Windstream trade. This is what we talked to him about in that coaching session. All right, we said, well, Steve, wait a minute. The stock is in a downtrend. It's horribly overvalued, and its earnings are falling like a rock. What part of the checklist did this match? And so Steve's decision to sell was really more of a mulligan of oh man, you're right, I totally fell back into my old habits. Do-over, right? I'm just going to sell this one out. And of course, good that he did instead of sitting there waiting and praying for it to come back, because it didn't. Right? So when we use that stock buying checklist, it's going to help us avoid being in situations like this. All right, so let's look at some examples to paint the picture of what we're looking for, because every stock chart's different, right? Some will have more volatility than others. How much is enough, right? There's some value judgments that are or subjective analysis going on here in the price pattern. So let's look at some good examples, right? Again, I don't care about the symbols, and I don't care, we chart their performance here, but focus on bottom left, upper right, smoother the better, driven by earnings, right? That's what we're looking for. Here's Skyworks. Had a nice little pullback here. This pullback happened to coincide with a market pullback. So, if I was looking at a chart of a stock now and it pulled back into the Christmas lows from last year, well, it doesn't surprise me. The market pulled back, right? The majority of stocks in the market pulled back. So what I'm looking for is, all right, after the pullback, it resumed its uptrend and it sustained that over time. And the earnings never took a blip. All right, so there's Skyworks. Southwest Air, bottom left, upper right, driven by earnings. Advanced Energy. What? didn't even suffer the pull, right? A Renoir. It's beautiful. That's probably the most idyllic one of the bunch. Well, maybe Ultra Clean Holdings is, right? Did you see how that just kind of pops at you? Right? We're visual beings. We're very good at recognizing patterns, right? Smoothing lines. So let's lean on that. So we're going to do it together, and we're going to look at some stocks from today's market. So I'm going to bring over the VectorVest tool, the tool I use. And this is a thing called the stock viewer. And notice that the stocks listed here, we currently have 8,300 stocks listed in the US database. Notice that they are not listed alphabetically by name or by symbol or by market cap or price, right, or their performance today. They're sorted by this thing called VST. Remember we talked about you needed information, not just data? VectorVest analyzes these stocks for their intrinsic value, their upside potential, their safety, and their current price trend. These three 0 to 2 based indicators are wrapped up in VST, which is showing us on combination the stocks that have the strongest combination of value, safety, and trend. By sorting VST descending, I'm bringing to the top of the list the stocks that have the strongest combination of those three attributes. Okay, so we're going to look at this list of 20 stocks, and what I'm going to do is I'm going to show you their graph. We're going to look at a 1-year graph of the stock price and their earnings. And what I want you to do is take that eyeball check, right, bottom left, upper right, smoother the better. If you like the pattern, write down the symbol. If you don't, let it fall from your mind. Right? There are no wrong or right answers here. Where it gets interesting is I'm going to give you 3 seconds to make up your mind. So I'm going to force you to rely on that initial gut instinct. You can always go back and do the extra vetting you want to, but I want you to rely on your gut instinct first to pick the best of the best, if you will. All right, so if you like the symbol, write it down. All right, here we go. I'm going to hit the graph all button. And first one up is SAIA, and I'll count it off 2, 3, and we go to the next. XPEL, 2, 3, next. CCMP, 2, 3, INS, 2, 3, CASH, 2, 3, CPRX, 2, 3, ENTG, 2, 3, AUDC, 2, 3, maybe I'm counting a little, I feel like I'm counting a little fast. DHI, 2, 3, TECD, 2, 3, and we kind of lost it, didn't it? ALG, 2, 3, ODFL, 2, 3, HELE, 2, 3, KLAC, 2, 3, MLNX, 2, 3, NOC, 2, 3, ACGL, 2, 3, HALL, 2, 3, PLMR, 2, 3, a new listing. We just added it in April. That's why you don't see a full graph. And WGO, 2, 3, pencils down. All right, so what did you think? Right? How's that different from how you've been picking stocks? Well, first of all, you might have noticed that they weren't all great. Right? You didn't like them all. And that's okay. We're trying to be more selective here and pick only the ones that are consistently rising. So hopefully you also notice, particularly there were a couple at the end there that just popped to me as beautiful graph patterns. Right? Did you feel how intuitive that is? Right? And certainly how easy it is. It's got to be faster. I don't know what you do when you're looking for stocks to pick, But whether you're listening to the screaming heads on television or talking to folks in the locker room at the golf course or whatever, that's got to be faster, easier, more intuitive. All right, so if you had to choose, would you rather slog through the data and the 200 charts a night, or would you like to have a tool that you get to your answers quickly? Right? So let's talk about how we can take what we've learned so far, right? Using a checklist to pick those stocks gives you so much more confidence, it saves you so much time, right? Putting that together with our systematic approach, then let's talk about how we can create a 10-minute routine to manage our portfolio every day. All right, and the beauty of this is it's a 10-minute routine that you can do when the market's closed. You can do it before dinner, after dinner, 2 o'clock in the morning, you work a third shift, whatever. It doesn't matter. It's a 10-minute routine that you can do on a daily basis, whenever it's convenient to you. So we're going to turn back to Rob because he was our case study. And I'm going to show you how he went from being stressed and overwhelmed in the financial collapse using his simple plan. Right? So he had lost 40%. He was afraid he'd have to get his job, another job. And he said, before taking that drastic step, I started to do my own research and try to recoup my losses, spending hours each day in front of the computer, reading articles, listening to so-called experts. Subconsciously, I was only hearing what I wanted to hear. I was now beyond despair. It all looked too hard, and getting back onto the job treadmill seemed inevitable. But this is how he saved his retirement. He followed a simple plan, and we're going to draw it out together, this time as a 3x3 grid. Right? There are 3 main sections to his plan. First, he needed to know when it was okay to buy. Secondly, he needed his stock buying checklist to tell him what he should be buying. And third, he knew he needed to make sure that he knew when to get out of a trade, so he needed to know when to sell. Does that sound familiar? We talked at the opening about the 3 pillars of any trading system. When to buy, what to buy, and when to sell. So the 3 cells in each row then are the criteria for when he's ready to buy, for instance. Right? So the first thing he wanted on when to buy was he wanted a market timing signal to tell him that it's okay to be buying stocks, that the market is rising. Right? You're putting the odds in your favor of your stock rising if the broad market is rising. So a lot of the institutional investors, right, they're using the Golden Cross. Well, he uses a thing in our system called a green light, right, which tells him when it's okay to buy. Then he also makes sure right up to the time where he executes his order, his buying order, that the market's continuing to rise and that the stock is continuing to rise, right? Everybody's moving in the right direction up until the point where you give over control by hitting the order button. For the what to buy, well, that's easy. He just used the checklist, right, that we just covered. For the when to sell, this is kind of interesting considering where he was, right? So he used a market signal to protect his portfolio from ever collapsing again. He used a market signal to tell him when to go back to cash. Okay? Again, some people use the S&P moving averages, right? In Rob's case, he was using a thing in our system called the confirmed call. All right? Now, you don't have to, well, let me put it this way first. The reason he liked it, the reason that was so attractive to him of going back to cash is that 2007 and 2008 are off the table. He would never experience that again because he had gone back to cash. So, we've gotten a little farther away from that. People are feeling a little more confident. So maybe instead of going to cash, maybe you hedge the portfolio, right? Or tighten stops, do something defensive, right? The worst thing you can do is just sit there holding the positions and taking the pounding on the top of your head. So the second thing that he did in his when to sell was he made sure every stock in his portfolio had a stop loss. And then he also liked to use a profit target to help him eliminate greed. Right? So think about, what am I going to do with a trade that becomes wildly successful? Your emotions can get just as dicey when you're making quote unquote too much money as when you're losing too much. Right? You want to take some of the profit off the table, you want to let it run, you want to close the trade at right? Think about that going in. All right, so let's do the same personal inventory gut check that we did on our previous slide, right? Take your pen or your pencil, the three aspects: when to buy, what to buy, when to sell. If you have answers to those questions that are working for you, put a smiley face or a star next to them. If you have a box that's empty or doesn't work, give yourself the frowny face. Right? So just like we saw on our triangle diagram, for you to be consistently successful, you gotta have 9 smiley faces. Right? So we've identified where you need to work. Right? But once you have the 9 smiley faces, this is how the process works. And it actually starts with when to sell. We actually start here. A stock hits its stop criteria, right? Or you exit on a market signal. But basically, you have a portfolio that has some cash in it. The first question is not, well, what am I going to buy with that cash? The first question should be, should I even be buying? Here's my horrible arrow. Right? I have money burning in my pocket. Should I even be buying stocks? What's the market doing? If the market's not rising, sit on the cash. When the market starts rising, okay, now I'll come in and buy those stocks with their nice, pretty patterns. Assign their stop losses, rinse and repeat. This is the process that takes you 10 minutes a night. You come in off of the golf course or from work or whatever, you log on to your brokerage account, you see if any of your stocks have hit their stops. If they have, check the market. Is the market rising or is it doing something ugly like today? And you decide whether or not you should be buying. If you're not supposed to be buying, log off. Go for a walk. Go spend time with your significant other. Right? The time is yours to do with it whatever you want, but there's no reason to try to flog out of the system something the system isn't ready to give you. All right, so when you do this system, this is how Rob turned his portfolio around in just minutes a day. All right, finishing out his case study, he says, using these techniques and using it together with VectorVest with their fundamental and technical analysis systems, I went to the market. By the end of the year, I'd recouped all my global financial crisis losses. Nowadays, and here's the key, I spend minutes a day managing the portfolio, giving me the money and time to do the things that are really important to me. Now, I don't want that to be a performance claim. What I want you to take away from this is that if you talk to Rob, he's a very down-to-earth guy. And he'd tell you that if he can do it, you can do it. And I'm here to tell you I've seen thousands of people do it. You can do it. All right? So that's about Rob. Let's talk about you. Right? What have you just learned? Right? What areas do you need to work on first? If you write them down, somehow they're concrete and it becomes more of a plan than a dream. Right? Get these 2 systems that we showed you today, both the triangle and the matrix, right? Get them to where they're all smiley faces. Right? When you have them all smiley faces, you'll be able to manage your portfolio in 10 minutes a day and outperform the market. Right? So, if you haven't been satisfied with the results you've been getting up till now, right? Maybe you didn't know where to go to get good stock picks or information because you get buried by all the crud that comes across your email transom every day, right? Or the people shouting at you on TV that they really don't resolve anything. Maybe your results have been up and down and you're just tired of getting yanked around by the leash, right? Maybe it's a combination of everything. You've lost confidence that you can actually do this well, right? But you just can't bring yourself to rely on the spotty results that the industry gives you. Maybe you're doing okay and you just want to get better. Fair enough. All right. Hopefully I gave you some good ideas on how you could do that for yourself. But hopefully through this presentation now you know that it is possible to get your answers quickly when you have the right tools and a checklist. And that by doing that, you can invest confidently and not have to rely on the quote-unquote gurus telling you how to buy stocks that are going down. And you can't get consistent gains in just 10 minutes a night when you have the right plan, right, and the right systems. So right at the start, I promised you that I'd give you everything I could, and at the end, I'd show you a system where you can take all the things we just covered and plug them into your own investing to get results faster. So that brings you to the obvious question of, well, how can I start doing some of this stuff for myself? Right? Well, you do have a choice. You can try to incorporate some of the ideas that I presented you with today, kind of do it self-study, right? Kind of work them in on a trial and error basis into your own systems. There are some trade-offs though, right? It's going to take longer and you're going to make some mistakes that can be costly. You do have the other choice though, and that is to do what I did, what Rob did, and that's use a system that gets you to the right solution already, right? Why do all the work on your own, particularly when there's a system in place that's already done most of the work for you, a system used by tens of thousands of people across the globe that help them make money in the markets, particularly when you also have to work on yourself. Right? There's kind of the mechanical side of it, and there's the performance psychology side of it too. Right? So if I was going to try to give you a plan where you and I would work together and I would teach you how to do this consistently, literally you and me in a room, this is what I would get you to do. We developed this course called the Successful Investing Quick Start Course with you in mind. Right? It's designed so you can consistently outperform the market in this 10-minute a day routine. Right? So before I tell you about the course, I do want to point something out. Einstein said everything should be made as simple as possible, but not simpler. I'm not here to tell you that this is some, if you just do these 4 simple steps, the world, the sky's open and everything is wonderful and the world is all fixed. Right? Sorry, this is reality, and it's going to be it's going to take a little more work than that, right? What I'm offering to you here is a way to permanently fix your broken system, right? By outperforming the market in this 10-minute night routine, you get more money to provide for you and your family, more security, more financial security, even into your retirement where you can continue to generate income even when you're not working, and more freedom to live the lifestyle you want with the time to do the things you want to do where you want to do them. Right? So we put the course together for serious people who are willing to do a little bit of work, right? With the goal of seeing steady, consistent gains, removing the frustration and anxiety from managing your portfolio. Right? So easiest way to explain the course, I map it out for you. It's just in 5 modules. Right? The first module is all about becoming an expert in analyzing stocks. Right? So you're going to become an expert and you'll be able to quickly determine whether the stock is a good or bad investment. You get rid of all that information overload. I'll show you exactly what indicators to look for, and you'll get your information quickly and your decisions quickly. The second module is all about learning when to sell. Of course, this is important because you have to minimize your losses. You have to control your losses in trading. So we're going to walk you through the exact steps you need to take to get rid of the stocks that are actually hurting your portfolio now. But then we'll also teach you how you only risk 1% on a trade, so you'll learn how to use stops. Okay, the outcome is that you now get peace of mind because you go into any trade already knowing when you're going to sell. Right? You have already identified, if it goes to here, I'm out. Right? So we're going to become an expert in stock analysis, pull the weeds out of your portfolio, and manage risk. Lesson 3 then is looking for the exact signals that you need to look for to know that it's okay to enter the market. Obviously, it's important because if you buy stocks at the wrong time, even good stocks drop when the market drops. Right? You don't believe me? Look at 2008. So you've got to know when it's okay to buy and when you should not be buying stocks. When's the last time you heard somebody on CNBC or anybody in the industry for that matter tell you that now's not a good time, just sit in cash? That's not how the industry works, right? They need us investing and trading. Right? So the outcome here is that we're putting our probability of success in our favor by buying stocks when the market's rising. All right, the fourth module is all about teaching you what stocks to buy. Right? So instead of relying on the gurus sending you stock picks or wasting time sifting through a bunch of data or stock charts or 500 emails every night. We'll give you 2 cherry picking techniques to pick the best stocks for your portfolio. You're never left with a guessing game as to whether a stock is good or not, and you'll never have to put your trust in some guru. I'll show you exactly what to look for. All right, and then finally, we just need to put it together into a 10-minute plan, right? Because you don't want to be spending hours a night unless you find it fun, right? But the idea is you don't want to be spending hours trying to manage your stocks. You want to do it in an easy, systematic way. So we'll show you how to simplify your day and have a plan. And the payoff here is consistently turning out profits over time. Right? So by the end of the course, you got a simple step-by-step system to buy and sell stocks. You'll be able to manage the portfolio in 10 minutes a day, and you'll consistently outperform the market. Right? Take all 3 boxes. So here's the thing. If I were to do that with you one-on-one, right, VectorVest would charge you $475 for the privilege. Right? A little cost prohibitive for most folks. So here's what we've done. Right? I'll still work with you one-on-one for the next 30 days. We're going to use VectorVest and turn your portfolio around. Right? So even if you've had no success in the market or you've had limited experience, we're going to do it together. We've built the 5 lessons as recorded classes, which you can access anytime and repeatedly is the nice piece, right? Most of us get about 70% of it on the first pass, but because these are recorded sessions, you can access them anytime, day or night, even if you work 3rd shifts, but you can also watch them multiple times to make sure that you've captured all the information. That doesn't mean, though, that we just deliver you these 5 videos and we're, see you later. We're there for you live every week with this coaching support. All right? So what we like to do to make this not only affordable but also enticing for you is that instead of charging the $475, we do this course for $9.95 total, all in. Right? That's the cost of lunch. Right? So if you'd like to take the course with me, go to vectorvest.com/SIQSC. You can sign up on that page. Right? I want to be sure to help you fix your portfolio, turn it around at little or no cost to you, prove to you that the system works basically on my dime. Right? So, we built the course directly into VectorVest, so to do the course, you also are going to need access to the VectorVest tool. That lets us all be on the same platform. Now, you don't have to have VectorVest to do this successfully. What I'm hoping to do here is give you skills, life skills that you'll use forever, whether you stay with VectorVest or not. Right? But it gets us all on the same platform. It gives you time to go through the course with me, implement the things you're learning, and see the results. Right? The tool does reduce the amount of time and effort you spend finding the stocks, but we'll teach you how to do it. All right? So, at the end of the course, if you choose to stay with VectorVest, we have monthly subscriptions that start at $69 and go up to $129. You can make that choice anytime during the course that you want, and you can also change your mind. All right? The second bonus is this weekly coaching session that we do, right? Because we don't want to just dump the content, because we've seen through this coaching that a lot of folks, they see some ambiguity in the instruction, right? And say, well, what if I'm standing on my left foot and squinting my eyes a little funny, right? So I'm going to be with you there every week, making sure you're okay. So every week you're invited to a live webinar where we give you tips and techniques on how to use VectorVest. We'll discuss what's going on in the market and what our market timing indicators are advising. And then I'll spend time helping you applying the things you're learning in the Quick Start course. Okay, so we're going to discuss your successes, what you're working on right now, and exactly where you need help. If you need help with any part of this system, I'll help you. And as we saw with our examples from Steve in the course, that feedback loop is critical to your success. So here's a testimony we did get from Tom. He went through one of our earlier sessions. He gave us a nice testimony here. Thing I like to point out, right? His success really turned around when he developed his written plan right? When he organized his trading into a systematic approach. Now, we've been around for 30 years, so we have plenty of testimonials I can share with you. We have Facebook pages and all that. I invite you to look at all of them. So I won't bore you with that. But remember, we talked earlier in the presentation about the 4 big mistakes, and I asked you which ones you have made and which ones cost you the most. Well, even our low bidder at 127 bucks, I forget who that was, 117, sell win. It's all coming back to me, right? If that number was bigger than $9.95, right, this should be a no-brainer. All right, so if you're interested in taking the course with me, go to vectorvest.com/SIQSC. Chat me up in the box. Let me know that you're coming. We'll look for you on Thursday, all right, at our next coaching session. All right, but give me 30 days. Let's turn around your portfolio together, right? We'll do the coaching and the Q&As together. And I also want you to know that this is fully guaranteed, right? If you're not familiar with VectorVest, you probably won't need this, but if you take the course and you go, you know what, a bunch of punk, or maybe it's just not for me, I'll even refund you the $9.95. The idea here is I want to get that threshold low enough to not be a barrier toward you letting me help you fix your financial future, but keep it high enough that I keep out the riffraff tire kickers who really aren't interested in doing any work and distract me from helping the people who want help. So I'll even give back the $9.95. That's how confident I am. The course is worth multiples of that, obviously. All right, so I have no problem doing that. So that's the offer. That's the course. Go to vectorvest.com/SIQC. I'll stick around. SIQSC. I think I said that right. I'll stick around and answer any questions that you have. Let me hand out the PDF for you also with the trading plan. And let me also say thank you for any of you who can't stick around. I understand, but I appreciate you being with us today. I'll put up our slides so you have that address, vectorvest.com, and let me put the trading plan into the handout section of GoToWebinar Toolbar. If you're watching on YouTube, then you can contact our product support folks to get that PDF. That's in there. Of course, you have to have the PDF viewer to be able to open it. All right, but that's available to you. So let me take a look at the list to get your questions. All right, Sid says, so is this particular view strictly for investing, or can it be used for or altered to use for trading? So here's how I like to approach it, Sid. We take a perspective, right? So we're trying to do position trades here. But what I like to say is the course covers the fundamentals of investing and trading for that matter, right? All we did was change the time frame. So what I like to tell folks is if you're already investing confidently, you're outperforming the market, right? Then this may be too parochial for you. Maybe not. It's always good to cover the fundamentals. But if you're struggling to beat the market, or if you aren't consistently performing, then this is right up your alley. If you ultimately would like to have a trading system, be a trader instead of an investor, then I would still counsel you to focus first on the fundamentals of at least this position trading approach, right? And then you can turn it up. Once you've identified the components of the system, how they work together, then I can make it go faster. Does that make sense? All right, Ralph, you got the PDF. Does it use the Canadian platform for Canadian investors? Says Gary. Thanks for that reminder, because VectorVest serves not only the U.S. markets but also the Canadian, UK, Euro, Australian. Who am I missing? I forget who I'm missing. Right? We're in multiple markets. So when you live, for instance, in Canada, Gary, Then for that same $9.95, you'll get access to not only the Canadian market but also the U.S. market, right? Because we find a lot of our uh, overseas clients trade the U.S. markets because it's so liquid. So you get both for the same price. In the course, we cover particularly the U.S. and Canadian markets, um, just because that's mostly who's in the room. But if you're in from Singapore and you have a question, you can certainly ask the question and we'll still help you. All right, Sid, taking some options courses. Yeah, don't double up. I would suggest that you go onesie twosie. By the way, those of you who do trade or are thinking about trading options, this course will help you with your options trades, and that will help you analyze the underlying stock performance that you're then layering the option trade on, right? So we like to say good option trades start with good stock trades. So if you're struggling at all, that may be a key to your success. All right, Brian is in the is all in. So thank you for that, Brian. Now on Thursday, actually, let me do it this way. And go back to the program. When you sign up, right? When you go to the VectorVest.com thing and sign up, you open the program. It's going to open up on this welcome page, right? And there's some tutorials in here, and then we help you build a watch list of stocks you already own or you're familiar with. And I would encourage you to build that watch list because we'll use it, right, to help you learn the system of analysis. The course is on the training tab. So if there's any of you in the room who are currently VectorVest subscribers already, you already have access to the course. Just go to the training tab. Here are the videos. Here are the videos. Just watch those videos, and no matter where you are in the process, whether you've watched all 6 of them or not, come to a session on Thursday. Right? The sessions on Thursdays, well, first of all, actually the link is right at the bottom of this page. Just click that link to register for the session. All right, those sessions are on Thursdays at noon Eastern. We do record them. If you can't watch them live, that's fine. I encourage you to attend because even if it's not your question, you're learning by listening to other people's questions, right? And we're all in the same, we're all facing the same dragon here, so there's a lot of overlap. If that Thursday session is not convenient to you, we do have free product support. It's available 7 to 11 every day Eastern time. We have email support, right? We tie our success into yours, so we have no problem supporting you in this system. Right? So that's the courses. Watch them. Come to the Thursday session. Right? And that's all there is to it. By the way, I've looked at a lot of our competitors, right? And I want you to feel confident that there are no upsells here. Everything you need to be successful in this program, in this lesson, is included in the $9.95, right? VectorVest has all these tabs, right? So there's a lot of power within the system because we're serving people that range from buy and hold investors to day traders and option traders. So there are a lot of tools within the system, but to buy and sell stocks on this very prudent basis, you have everything you need to do included, all right? So there's not going to be any special $400 fee that you get to pay to get the special blue button. Right? So, Michael, yes, we obviously support options then. And Geo says, if you use a credit card to pay the $9.95, do you have to cancel to prevent any additional charges to your card? Yes, if you don't want to continue, then yes, you can just give us a call, say, hey, it's not for me, turn it off, and we'll help you out. All right? Because ultimately that is the bottom line, right? Are we helping you fix your portfolio and provide for your financial future? Right? That's why we're here. And that's why we've been here for 30 years, which is actually kind of unique in the industry. There aren't a lot of companies that can say that. All right, so let's wrap it up. I think I have all of your questions intact. Leander, I just saw your question come in. Any impact if you're already with an existing broker? We are not a brokerage, so no, absolutely not. So we're independent of the brokerage transactions, so we have no dog in the hunt about whether or not you trade a lot or a little, right? So we don't need to pump you with a bunch of stocks that need to be bought today, right? So we're independent from that brokerage transaction. Most of our clients, I think, use discount online brokerages, and we have several that we partner with so that you can create trade tickets within the VectorVest system. We have this little trade now function. So if you have an account with those partner brokerages, then you can create trade tickets from the VectorVest system and then transmit it to your account. But to be honest with you, it's not the end of the world if I actually had to log onto my brokerage site at the same time to enter my trade for SAIA. Right? But that's available to you if you like. All right, so VectorVest.com/SIQSC. Go to that website. The replay for this video and that offer will be good through Sunday. Right, so I hope you'll take advantage of it, and I'd love to see you on Thursday. And if you come to us on Thursday, by the way, at the beginning of every session, we ask folks who are new to the group to introduce themselves, which basically says, "Hi, I'm here for the first time." Right? We'll give you the warm, fuzzy back rub welcome. Right? Get you inculcated into the group. Right? It's a fantastic group of folks. We consistently stay together, and folks who have even gotten through the course have stayed with the group. They give their advice and their feedback as well. So it's a very nice, dynamic group of folks helping each other. All right, so someone, if you'd like to talk to us, we do have a toll-free number. Of course, you can go to VectorVest.com as well, but let me chat it in the box here for you. So in the chat box from GoToWebinar, our toll-free number is 888-658-7638. You can call and talk to a human if you would like to do that. All right, so with that, let's wrap up the session. I appreciate it again that you gave me some time this afternoon. Have a great weekend, and we will see you on Thursday. Take care.